Hi, my name is Theo de Jager. I'm the executive chair of our Family Farmers Network, SAI, and we are hosting today this discussion on agricultural finances in cooperation with the Thabo Mbeki Foundation. This is one of the issues which we have jointly identified as a challenge for the future of agriculture and for food security in our country. We will probably all remember 2020 as the year of disasters with COVID and with the droughts, the fires we've had in our country. But from a farmer's point of view, the demise of Land Bank is probably the biggest disaster that struck us last year. And many farmers are in dire straits. So the purpose of today's conference is to ask the question, how are we going to plug the hole which was left by Land Bank, and which initiatives are there currently in the private sector to do just that? Welcome to all our speakers, and I will introduce them all to you in due course. But the first of them is Hugo de Waal, a farmer here from the Western Cape. He's a crop farmer. He's a well-known agricultural leader in this province, and he's also SAI's representatives at the Kearns Group of countries. Welcome, Hugo. If you can just introduce us to the challenge.
Thanks, Lou. I'm here as a farmer to bring firstly the dilemma that the current farmer situation for agricultural financing is in, and secondly, what agriculture needs for financing in the future to go forward. Can I just ask for a spreadsheet, please? Okay, there it comes. This spreadsheet comes from Department of Agriculture and Fisheries and is compiled by Ms. Martina Bernarda. As you can see, there's to the right, I just want to see what the total data is on the bottom there. Can you shift it to the left, please? That's it. In the left there in the bottom, you can see the total data of agriculture is 190 billion rand, of which land banks holds 54 billion. That's about a quarter of the total. And the commercial banks 116 billion, and agricultural business, that's the co-ops that's over there, that's 14 billion. Now, agricultural debt increased substantially over the past decade, as you can see on the spreadsheet there. This was because of huge increases in production costs, and the drought was also a main contributor to it. Since mid-2020, with the difficulties at Land Bank, financing for agriculture was strained because Land Bank holds 25% of the agricultural book. Farming enterprises face difficulties to obtain production credit on time and sufficiently, because a lot of farming enterprises had a production cost financed by Land Bank or agribusinesses as secondary lenders of Land Bank money. Commercial banks did take some of the book over, but there was a lot of farming enterprises that was left out and was subject to huge increases from the Land Bank in the interest rates, or they had to pay the total loan back. And that had a huge negative effect on the farming enterprises. Agribusinesses that supplied production to farming finance was also negatively influenced because their line of credit was cut by Land Bank and was also severely affected. Most of them tried to divert those loans to the commercial banks, but was not successful in all circumstances. These previously mentioned circumstances, it affected a lot of farming enterprises did not obtain financing on time and sufficiently, and put them at a huge risk for going forward. These enterprises are mainly in grain and livestock farming, which is SA's staple foods. These were the farming enterprises that was the hardest hit, and cash flow projections was far off, which had a negative effect to obtain credit. Grain production financing costs are high, and financing is crucial on timing and sufficientness. Can have a huge impact on South Africa's food security, as a large percentage of our wheat is already imported. There is an unconfirmed 2,700, I say it again, 2,700 farming enterprises which might be liquidated of the 25 to 30,000 farmers that's there. But this is also a figure that not concurred by everybody. This is roughly 10% of the farming enterprises has the potential to put all farming enterprises collateral at a huge risk. This will definitely have a negative impact on already difficulties to obtain production credit and will have a negative impact on long-term investments. Definitely have a negative impact on South security, especially for the lower income group. The problem that we have now at this currently, and what's agriculture awesome to full in the future. Agricultural need affordable financing at prime minus and not prime plus. The current Credit Regulatory Act is not friendly for agriculture because of the cyclic nature of farming, where weather plays a huge role outside the control of the farmer. This act, which is a good act, makes it difficult for farmers' enterprises to go through droughts to obtain credit for the next season input, even though balance sheets are strongly at 5-1. Because of the negative cash flow, it makes it difficult for lenders to finance farming enterprises, especially in the second and third year of drought or other natural disasters. Then thirdly, there must be a solution to finance upcoming farmers at 100% of their needs with soft loans that may enact capital holidays of 5 years for cash crop and livestock farming and 10 years capital holiday for long-term products such as fruit trees. This financial is crucial for long-term stability for agriculture in South Africa and the protection of capital in the long run. Thank you very much.
Thank you so much, Igu. Our next speaker is Dawie Rood, well-known economist, and he is the chief economist of the Efficient Group. And Dawie will explain to us how we landed up here and what our options are. Dawie?
Thank you very much, Dr. Thank you very much, Dr. for the opportunity. I was given 5 minutes. A few things that I think are important. I just want to say one or two comments, or make one or two comments as far as agriculture itself is concerned. Now, I listened to the previous speaker telling us that agriculture should get financed at below market rates. I think I disagree with that. And part of the reason why I disagree with that is simply because agriculture is not a primary industry anymore. Agriculture is a very sophisticated industry today that is part of the, actually, in many, to a large extent, part of the tertiary industry. We have seen, and I'm very, very bullish on agriculture. I think there are huge changes happening in agriculture, and things like, for example, genetic engineering or people that specialize in things like drones, and you guys know much better than me about that. That's actually part of the service industry. So I think we have to look at agriculture differently. It is not one of the dirty industries anymore. It is a highly sophisticated modern industry. So that's just the first comment. A few things about the South African Land Bank. The Land Bank was created more than 100 years ago. The Land Bank's job is to provide loans to commercial and emerging farmers. It was already mentioned that they provide more than 25% of total funding for agriculture in South Africa. They also provide certain insurance products, the Land Bank. But like most state-owned enterprises, the Land Bank, which is one of the state-owned enterprises, has been mismanaged financially and operationally, and is in very, very deep trouble today. So it's a mismanaged organization. The emphasis recently was to a very large extent on development and to provide finance for creation, especially of small new farmers in agriculture. Just a few numbers. In the current year, the expected loss for the Land Bank is likely to exceed R1 billion. Last year's losses was about 1.3 billion, so things are improving a little bit. And that's part of the reason why it's so difficult to get money from the Land Bank, because they're holding back on new loans. The current turnaround strategy, because the Land Bank is in default, the current turnaround strategy means that they have to talk to their creditors. There are a few suggestions on the table. I'll get to that just now. The Land Bank, as things stand at the moment, simply cannot go on with business as normal. Most new loans have been suspended simply because of cash flows. That's the reason. That's part of the turnaround strategy. And that improved their cash position a little bit. So they're not giving out new loans or far fewer, improving their cash position a little bit. They can only service their existing clients, so they can't really take on new clients. which makes things like, for example, development of new farmers very, very difficult. The cash position itself improved a little bit. Currently, they have cash on the balance sheet of approximately 5 billion rand, slightly more than that. And the Minister of Finance provided an additional, or he penciled in an additional 7 billion rand for a land bank, of which 3 billion actually flowed already. This 3 billion was used to pay off existing debt. The capital adequacy ratio at the land bank, that's a bit of a technical thing, currently at just below 9%, but with the help of the state, that improves to more than 14%. And that just indicates the extent to which the land bank depends on the state. Outstanding debt at the moment in excess of 40 billion rand. As mentioned, the land bank is in default. They missed a payment last year in April, and the loan book is under tremendous pressure. Non-performing loans at the moment, nearly 28%. Last year it was only 16%. So there's a huge deterioration in the land bank's loan book, and that means loans are outstanding for 90 days or more. 10% of the loans are impaired. Now the creditors are asking for an independent review of the debt book, and the creditors are asking for the loan book to be split into a commercial part and a developmental part. And they're planning to repay 3 billion in September of some of these loans, or some of this outstanding debt. The Auditor General's report reported weak internal controls and governance at the land bank that needs to be fixed before anything else can be fixed. A few comments about what can be expected. We must understand that the fiscal accounts in South Africa are in very, very deep trouble. And that's a different way of saying that we cannot look to the state to improve or to keep on giving money to the land bank. The state simply doesn't have money. The debt levels are at record levels. The fiscal deficit is huge. We cannot borrow more money. So do not look at the state to give huge amounts of money to the land bank. That is simply not going to happen because we simply do not have money. I think it's important that the developmental and transformation goals of the land bank is the first priority, and that is wrong. I think we need to change that, and we have to, or at least split the land bank in two, and we have to make sure that the commercial part of the land bank remains healthy. Having said, I did mention the fiscal accounts, which have become completely unsustainable, but I do believe that of all the state-owned enterprises, if there's one state-owned enterprise that will get a friendly ear from Treasury, it certainly is the land bank. So if there is any money available, I'm pretty sure that the state will make money available like they've promised. But we have to remember that they literally ran out of money. As an economist, a few alternatives if you want to talk about funding for the agricultural sector. First of all, I think we have to understand that the monetary policy cycle internationally is for tighter monetary policy. That's a fancy way of saying that interest rates are likely to go up internationally, not immediately and not by a lot, but interest rates will start going up soonish, within the next year or two or so. So keep that in mind. And South Africa inevitably will also follow this international monetary policy change in monetary policy internationally. So here are a few suggestions. Agriculture can borrow from the normal commercial banks. That is usually a little bit more expensive for various reasons, but that certainly is an option, and the commercial banks have been coming to the party recently. Agriculture can borrow from abroad. You can borrow much cheaper abroad. Unfortunately, you're running foreign exchange, or a currency risk, an exchange rate risk, which of course you can insure against, but that's quite expensive. So that's the downside from borrowing money from abroad. My suggestion is that agriculture in South Africa should try to borrow locally on the bond market, but that require larger groupings or groups of people, and of course much larger amounts of money. The South African financial markets are very, very well regulated, very liquid, and if somehow we can get big borrowers that can participate in the bond market, all the instruments are available for agriculture to borrow on the capital market. But like I've said, for that you need perhaps much bigger groups, and the amounts of money that we're talking about is significant amounts of money. That is a source of funding that I think can be developed significantly more than what we've seen up to now. Thank you very much, Dr. De Jager.
Thank you, Dawie. Our next speaker is Mark Barnes. Mark is a legend in the financing industry. He has had 36 years in positions of leadership in financial services institutions, principally in the corporate finance and treasury, which he led from within Standard Bank. He was the chairman of SAFEX SA Futures Exchange and the CEO of Brait, South Africa's first major listed private equity group. He recently led the turnaround strategy as group CEO of SAPU. He's highly regarded as a business leader and experienced all-rounder in financial markets and corporate strategy. And Mark will talk us through the options ahead. So what to do about it. Mark?
Thanks, everyone. And I need to thank my mother for that write-up that she sent through. 5 minutes is not a long time. Whenever I think about whether something can be financed or not, I wonder about the resilience of its income. And there can be no doubt but that agriculture has got a sound and growing source of income. I read recently that we had export revenues of about 90 billion for the first 6 months. If you annualize that and add to it the non-exported goods, and if you start looking at the flows, net import-export flows, you will find that there's a huge business. And it's strange to me that it's not capable of being financed appropriately and formally. Because we need to start off from the supposition that there is finance available. It's just whether it's in the right mix and at the right price. People will get access to money at any price, and there always is money. There's never a shortage of money. It's making sure you've got it in a capacity, in a context which enables you to grow and build, rather than which harvests every cent that you plant and more. So I think we need to get to peace with the fact that there are commercial and developmental mandates that have to coexist. It's part of the puzzle. And a puzzle is just a series of pieces until the last piece is put in, and then it turns into a picture. What we're going to need to do here to finance agriculture in South Africa, which is both virtuous and valuable, is get a whole bunch of disparate people together to talk about a composite solution. Land Bank will be central to that funding solution, but it's not the only player. Government will be essential to that solution for various reasons, including land security and support. But existing structures have to be completely reconsidered, in my view. We have to think about central coordination, but decentralized access to funding. We have to talk about bespoke, specific funding packages to match the local and very different requirements of different stage developing farmers, from the beginnings of a small farm to farms that can supply major retail outlets. And they also have a role to play in terms of offtake agreements and all of these kinds of things. And I think what we need is an intelligent center that has an open mind, which is prepared to accommodate these various forms of funding, which will only come together and only permit the developmental mandate if indeed the commercial mandate has already been somehow strung together. That means that nobody can own this, but everyone must participate in it. We need to move away from seeing this as the responsibility of government or the responsibility of Land Bank or the commercial banks. Let me not talk on their behalf, but they run a commercial business. You can't expect them to be part of, overly part of a developmental mandate. But there are, and the previous speaker alluded to it, there are various forms of funding. There's obviously the capital markets, which was spoken about. Eskom never used a penny of taxpayers' money to build Eskom, and it built the cheapest electricity supply in the country, which I think at one point rivaled Japan in terms of output. And so what was required for that to happen was an equation in balance. And that's not what we have here, both in electricity and in farming. In electricity, money's been taken out of the equation, money's been wasted in the equation in terms of supply contracts, and debtors are not meeting their obligations. You eliminate any one of those factors, you do not have a financeable equation that can dispassionately be looked on by the suppliers of capital. There is never a shortage of money. There's just a different price. Okay, so who could we involve? And I think we have to go wide. First of all, there is a deep and liquid commodity futures market in the world. And I've been in contact with the CEO of the biggest commodities traders, which is Viterra, which is part of Glencore. They can't wait to get themselves amongst the flows of our underlying agricultural businesses. There are established specialists, some of them more philanthropic or more inclined towards farming finance than others, but there's certainly established forms of international expertise. And agriculture, as someone previously mentioned, it's not a local game anymore. It's an international, modern, well-discovered, properly priced exchange. And so I think international funds are necessary. The South African banks, we've spoken about just now, but they're not going to lend you money that's not got the right risk return, that's not properly secured, where they cannot satisfy the basic tenets of banking, that the loan will be serviced and repaid. And to ask them to do anything like that is to disturb the systemic stability of the banking system in South Africa. So forget about that. National Treasury has to come and play a role. You know, I think National Treasury guarantees are the cheapest form of capital around. Essentially, they guarantee the banks to take deposits from the retailers. So what's the cost of capital? The cost of capital is the marginal deposit rates of us. And so, you know, that's got to be factored into the equation somehow. One of the boundaries that I think we have to break is the equity boundary. I think we have to look at the appropriate debt and equity components of capital in the farming industry, and the components of debt and equity capital in some institution like the Land Bank. I personally think that we should have a much bigger state bank, and I know it's anathema to lots of people, but properly considered and properly managed, it can fulfill a lot of these roles. But we need to be able to participate in the upside if we want to attract the right cost capital, growth enabling capital. Banks never enjoy the upside, so don't expect them to finance the party. Okay, what we need is some people that can participate in the upside of agriculture, which for the last year, for example, would have been a very attractive asset class. 5 minutes is not long, let me rush through it. We're going to have to satisfy, as I said, very different demands for very specific parts of the supply chain and so on. So what do we have to debate? First of all, the farmers that are going bust, the 27,000 or whatever, we need survival finance. Okay, so we need to bridge a gap which ensures that no land becomes dead. There's a proper word for that, but we need to ensure continuity of previous investment. We need to fund crops separately from looking at whether we need to improve the capital intensity capacity of farmers and all of that, and the graduation of farmers up the supply chain. We need to, first of all, look at how do we finance this crop in time for the rain. And I'm not a farmer. I went to a farm school, but that's about where my farming expertise ends. Land Bank has to somehow get to peace with its book. That means someone has to buy the book, or they have to capitalize the loans. We have to draw a line behind us. We have to love our future more than we hate our past. And Land Bank will never dig itself out of this hole unless some kind of capital reconstruction or understanding of its necessity is brought to bear in its accounts. Otherwise, they're just from the depth of the hole in which they find themselves, they will never surface with enough vision to embrace this problem and make a success of it. It's way beyond survival, agriculture. It's a strategic, second only to mining, or even competing with mining in its characteristics of how many people it employs and what sort of trade it can become part of in the world stage. I mean, I see barter as part of the solution. I see us swapping cows for oil, if you like. That's not agriculture necessarily, but livestock. But I see us moving, as someone said earlier, into a much more sophisticated understanding of this. We must stop thinking farming. We must stop thinking politics. We must think financial equations. Okay. So Land Bank issuing agri-bonds, 100% part of the solution. And then I think we need to dig into the data and find out the facts and find out how the supply is aggregated and how we can access it and deliver it into a financial equation. And so I'll stop there if you like, but I mean, I'd end with this. If we don't finance this in the formal sector, if we don't finance it in a responsible mix of capital that enables growth, someone else will finance it. And it'll either be the thugs or the foreigners who are interested in food security. And I would argue that that's not where we want to end up. We want to end up with a homegrown solution for homegrown produce. I made that up now. And I think it's imminently financeable, but we need to get everyone around the table and everyone needs to leave their suitcase outside, because this is 2021. This is not 100 years ago when the Land Bank was established. Thank you.
Thank you very much, Mark. Our next speaker is Henk Achenbach. He's the MD of Humansdorp Corporatie, one of those who acted as forward lenders of Land Bank previously, who saw the trouble coming and who already went a few years ago abroad to see if they can replace the funding from Land Bank with foreign sources. Henk has sent us his input digitally. Daniel, can you play that for us, please?
The current problems with Land Bank have seriously affected us as a cooperative. This, together with COVID-19, has made banks in general more restrictive in terms of their credit. We fortunately moved our own working capital requirements to a commercial bank before the current problems with Land Bank started. In our case, we had 200 million in loan capital from Land Bank, which we then lent to development agriculture at subsidized rates. This was done to stimulate the development of previously disadvantaged farmers and was a program of the Department of Agriculture. The period was a 5-year term that would be available on a rolling basis. We could then make it available at 4% initially and with later tranches at an increase of 1% per year. Most of the money was lent to operational entities that farmed on a joint venture basis. Commercial farmers can own up to 50% of such farming operations. Joint ventures were also established with beneficiaries on government land and was financed with this loan capital. Emerging black commercial farmers who are already farming independently have also been funded in this way to expand their own operations. Also because they sometimes don't have access to capital because of the lack of security of land. Eventually, 66,000 people were dependent on these farming operations. This is when we consider the beneficiaries, who were just short of 10,000, and the direct and indirect workers. We have found that in most cases, it takes some time for a positive revenue stream to flow, especially on government land, where there has usually been a varying degree of deterioration. Amongst these, there are great successes, and one such example was a citrus farm, which was turned around from a loss of 1.3 million to a profit of 1.6 million rand within a year. For 2 years in a row, this farm has received the prize for the highest net income per hectare of oranges, as measured by Fruit Data. We attended an international African funding meeting in Berlin with Dr. Theo de Jager, the chairman of the World Farmers Association. He also arranged for us to make a presentation on the successes and the way in which we approach our development projects. He then helped us get to the German Development Bank, with which we had been negotiating for quite some time now. This eventually led to us now being able to access long-term capital to provide long-term financing to our commercial farmers. Together with you, we engaged with the German government and the Development Bank to invest in these joint venture farms. However, they explained that according to their policy, they had to work through our official government structures. With a follow-up meeting, we would have visited them with the late Professor Mohammed Karan and Theo, and the plan was to channel possible funds via Land Bank directly to these farming projects, where there are already successes or where there is a fairly good chance of success. A senior German government official, Hans Egbert von Arnhem, came to visit us. Among other things, he would have visited our projects, but on the way, COVID broke out and he had to return to Germany from George. I believe that with a similar model and cooperation with our government, we will be able to obtain much needed long-term capital, which will stimulate the further development of successful and profitable farming operations, and which will provide much needed jobs and economic growth. For example, just one of our farming businesses have paid over 8 million rand in income tax alone over the past 5 years. The success lies in having a successful commercial farmer with his experience in farming, with an emerging black farmer or farmers or beneficiaries. There is specifically a big potential on government farms. Operations are usually structured into an operational company, and these farms will then get access to long-term capital without necessarily having the security of land. Long-term leases, 30 years or more, are negotiated on these farms. These funds should then be advanced through qualifying agricultural businesses to support these joint venture farming operations. One of the other important things that we have learned is that the participants and beneficiaries must understand clearly that it is about the economic success of the business. Otherwise, it will not be sustainable in the long run. It is a process of training and negotiation. The process cannot be started until all the parties involved have trust in the budget and bought into the whole process. We as a cooperative has looked into various options to finance our own growth as well as our own growing working capital requirements. For this, we are negotiating off-balance sheet funding of our receivables book and also funding our stock separately. We have, as mentioned above, also secured a long-term facility, which will put us into a situation where we can also fund some longer-term requirements of our members. I do think there is a huge potential in agriculture, and we need a specialized agricultural entity to fund agricultural operations. The focus should be on the longer term and less on the cost, as it is essential to have a longer term component in agriculture. This will stimulate further job creation, economic development, and much needed foreign income through exports. I thank you.
From it was great to get the input from Henk Achenbach too, even if he could not make it to our live stream. The foreign funding has definitely also plugged some of the hole. But of course, the commercial banks would also be picking up some of the slack. And to give us the perspective from the commercial banks, we have Wimpy Snyman from Rand Merchant Bank. He's a senior coverage banker and dedicated to the agricultural sector. He has some 20 years experience in corporate and investment banking. Wimpy, all over to you.
Thank you, Dr. De Jager. Sorry, struggling with the mute button there for a second. And afternoon, ladies and gentlemen. Can you hear me well? Great, thank you. It's indeed a privilege to be here today and to participate in a discussion which will hopefully lead to solutions surrounding the financial viability and sustainability of our country's agricultural sector. I think the problem statement has, from my perspective, been adequately defined and described. And as a result, my brief would be just to give the perspective from the commercial bank side. Firstly, on how we see the situation, and secondly, on how we think we can solve for it. So with that in mind, we're always aware of the commercial banks having till recently not been able to really compete with the land bank. Two reasons for that. The one is funding and the cost of funding, and the second one being credit appetite. So from a commercial bank perspective, obviously on those grounds, a more even playing field at this point in time. So with that in mind and that competitiveness in mind, I think of the two O's. Firstly, the obligation from the commercial banks, and secondly, the opportunity. Now, the obligation piece flows from what we see as pivotal, as commercial banks being pivotal to the South African economy and to ensure sustainability of its industries, and to play a pivotal part in that and creating sustainable solutions. The opportunity piece now comes in with the competitiveness. If we can play on a competitive playing field, it makes it much easier for us. When one looks at the obligation piece, I think sustainability comes to mind as a key theme. Now, this per definition in our minds steers towards diversification of liquidity and funding sources or pools, and away from the reliance on one specific funder or financier. It also steers towards taking portfolio risk rather than what we would call cherry picking. This ensuring a more diversified pools of assets for funding from a credit risk perspective. Another strong theme under the sustainability banner is the ability to scale and grow, which I think one needs to take into consideration when solving. Building out further on the theme of diversification of funding pools, and I am at risk here of repeating what has already been said, it's for commercial banks very important to create access to the capital markets and to enable funding from the capital markets into this space. The crucial building blocks in achieving this is to ring-fence portfolios of assets which fall within the mandates and spheres of the appetite for the capital market players, and to structure participation tranches which not only addresses these mandates, but also addresses the funding appetite and then obviously aligns with the liquidity requirements of the agribusinesses. The commercial banks see the agribusinesses as pivotal to funding the producer sector. The reason for this is their footprint and the on-ground knowledge and assessment capabilities. Commercial banks and their business models do not cater for the massive resource deployment in the rural areas, while the agricultural businesses or agribusinesses or co-ops, as we used to know them, have their resources on the ground and are able to keep track of growth and harvest progress and all associated risks. As a result, the commercial banks and other funders should leverage off this infrastructure and local knowledge base. And in this environment, the agribusinesses should act as risk mitigators, and then the alignment of interest between the financier and the agribusiness becomes very topical and important to address in possible funding structures. So that risk alignment or the alignment of interest is very important. We therefore still believe in the absolute necessity of the agribusinesses as the debt originators and as risk mitigators in this play. So that pretty much sets out the stance, if I can, of commercial banks. In terms of solving for the problem, we do not think that there's one silver bullet that will solve everything. But from a FirstRand Bank perspective, we have launched an initiative and we have started engaging with the agribusinesses on this initiative, in terms of which we have created a lending platform through which different agribusinesses will be enabled to have their producer data books funded by different market players. We foresee that the funders in this platform will range from the agribusinesses themselves through to DFIs. The commercial banks will be playing a role, and obviously pulling in the capital markets or the bond markets as indicated earlier by Davy. A simplified funding view would entail equity tranches, junior subordinated debt, and senior debt tranches applicable to specific individual originators or agribusinesses. This solution intends to create a sustainable funding platform with a highly diversified lender pool and ensuring required liquidity and the ability for future growth. Thank you, Theo. I'm glad to answer questions or comments later on in the session.
Thank you so much, Wimpy. Our next speaker is Kees Verbeek from the Netherlands. He's the Senior Advisor on Africa at Rabobank, of course, the world's biggest cooperative bank. It belongs to the farmers in the Netherlands. And Kees has many, many years of experience in setting up this kind of structures on our continent. Rabobank is very much involved in many of our neighboring states, also up in East Africa, and a number of our agribusinesses have already engaged with him. So Kees, while we all are fascinated with this concept of a cooperative bank owned by farmers, we also want to hear from you about your appetite for the gaps that are opening up in the agricultural financing market locally. Welcome.
Thank you, Theo. Let me try to clarify, and thank you very much for inviting me in this forum. Really pleased to share my thoughts here. Yes, Rabobank, we're from the Netherlands. 130 years ago, we were organized by farmers. Farmers were obviously dissatisfied with the commercial banks. They couldn't get loans there. So in the Netherlands, in every city, in every small village, even a small Rabobank actually was organized with full liability of each member for all of the loans. Over the years, of course, that structure has evolved a lot, and the bank has become very, very big. Today, we have about 600 billion on our balance sheet and about 400 billion euro in loans. We have a very strong bank. We have an A+ rating, one of the best ratings in the world. Today, our members are no longer liable for all of the debts. Obviously, there's a very, very big loan book. We cannot ask each and individual farmer to be liable for such high amounts of debts. So actually today, it's a cooperative with excluded liability. So all of our members don't have any liability anymore. And yes, we are international. I'm personally a member of a section which is called the Wholesale and Rural, in which we actually finance either very big food and agribusiness companies, but also rural markets in the USA, in Australia, in Brazil, and in Chile. South Africa is an opportunity. Hello? Yep. Okay, good. Thank you. So we talk about we have a few opportunities which I'm a member of a team which we investigate. South Africa is actually one of these opportunities. We do like the several aspects of the South African market. First of all, it's a very professional agriculture. It's relatively free of distortions. And it's reasonably diversified. So we do talk with a lot of the players. We talk with the commercial banks. We talk with some of the former co-ops, and we talk to individuals as well. Obviously, there are challenges for us as well. Where is the country now, and where is it going? There is strong competition in South Africa. We have a funding risk. We don't have a bank license in South Africa, so we need to fund rent on the capital market, and we're a little bit late in the game. And which that I mean is there's so many people close to the farmers, and we are relatively new, so we need to find a way to be much closer to the rural economy. For us, our model has always been to be close and to be understanding of the farming community. So we do, and at the same time, we do not want to enter a market and open hundreds of new offices. So today with the technology, there are many ways around it. So in that sense, it remains interesting. Another challenge, of course, will be to get competitive pricing. I think one of the former speakers mentioned affordable loans, and that's the only way which you could do, but on the other hand, we have our own risk-reward appetite, and we have to see if the two can match together with the risk. Obviously, any bank or any financial institution has its operation cost, it has its funding cost, there is inflation, and there are write-offs. So in that sense, we need to see if we can make a business model which fits everybody, every stakeholder, both of our clients and ourselves. So for South Africa, we need the right partners, we need the right structure, and we need the right timing. But absolutely, there's an interest for us to engage in South Africa. Thank you.
Our next input comes from Prince Sibile Mabandla. He's a businessman and a traditional leader, and also very much involved in the financing of the agricultural sector on the option of forward buying. Prince Sibile, over to you.
Well, on our side, I think I've listened to everyone's input. On our side, we've gone a bit further already.
We lost Prince Avile. It seems that he has some technical problems. Maybe
yes, I can. I'm connected. Hello. Hello, I'm connected again. Can you hear me?
Yes.
Okay. We've already gone on road trips into the Middle East to raise awareness about an opportunity to fund the transformation of the agricultural industry in South Africa. And this was informed of the this was informed by the positive response we received from the number of live exports of sheep and cattle we've been exporting from East London Harbour since 2018.
We have lost that connection again. Can I ask our backstage technicians if they can see if they can get a better connection with Prince Avile? And maybe for the sake of time, let's move on to the input from Mrs. Zanele Mbeki. Mrs. Mbeki is, of course, well known as our former First Lady in South Africa, the wife of previous President Thabo Mbeki, but she has a very proud record in this industry. Few people know that she was the founder 30 years ago of Women's Development Bank, and they have a number of projects all over the country. I've personally seen some of them, and they have a remarkable track record of a bank which started at zero. She's also involved with the Thabo Mbeki Foundation, with whom Sai is co-hosting this conference today. Mrs. Mbeki, over to you, and what a privilege to have you as part of our panel.
Thank you very much. And I have to apologize because I came into a health problem in the morning and I've been outside and I've only been reminded lately, I think when you were in number 7, that I'm supposed to be in the panel. So I apologize about that. You know, it could not be foreseen. I was looking forward to hearing the input from Mark Barnes because he enabled the microfinance bank that I started. Thank you very much, even Mark, because to believe that we could survive until this time, it's only because of your interventions in the beginning in the 90s. So I haven't heard anything of what has been discussed, so I can't discuss in context. But I'm just going to, what I see as a title for my input is that how we did it for women. I don't think, it's not your space. I don't think you would want to be in that space in any case. You know, for many of you, when I listened to the banking system, and after 30 years, none of them were interested in participating. And yet, for me, it is the space, the microfinance space is what is required to get those who have been left behind. Because most of the schemes that we do are for those that are able, who can get on. So I won't spend too much time on the group lending and microfinance and all of that, because except for putting resources the way Mark did before, it's not a space that most of the groups play at. Even the Land Bank started with Mrs. Helena Donnelly when she was CEO. They got up to about 400 clients and dumped it after that, because all sectors in South Africa want profit, and yet microfinance is in the beginning not for profit. So I just, what I wanted to share here is that South Africa has no policy for microfinance, even if you want to put your money in it, because the Treasury and the Reserve Bank since 1990 have refused to give us a capability to start. And it worked like what I think, like what was the credit bank for agriculture, because it gave a longer time and also a lower interest rate. Nobody wants to do it now, but I'll soldier on that one. What I wanted to share on this platform was actually the question that whether we can live side by side with what Professor Mahumad Yunus has introduced as social business, where we use donation as investments, because they nearly closed me down in the beginning in the Soros Foundation, because they assumed that I had used their donations in order to start the investment holdings, and it wasn't their money. That pushed me to start a trust. But right now is that Professor Mahumad Yunus has spread around the world. You can Google it, it's there. You know, he's got a website which is about social businesses, where you can use donations as investments, and also get investments without dividends, because we are a trust. For me, it suits me in the sense that even if somebody puts a lot of money, it's not, they should not be expecting dividends. It's just to assist the program, whether 5 years, 3 years or so. So that's really it. That I wasn't too sure whether when we look at the Ilovo size kind of business, whether you would want to consider a partner who is a social business and not a for-profit company. Yeah, I'll leave it at that, because otherwise I'll be stretching the same point. I can refer you to the sites which could give you a bit more about what we are doing. But I'm definitely going to try it, because it works in other countries. Even the microfinance worked with me for 30 years. And so even without the law in the country, all it meant is that I'm responsible for everything, recruitment, infrastructure, even the loan capital. So that's why it grew very slowly. But right now, I'm looking forward to getting into a bigger projects with yourselves, but we won't change our face in terms of our appearance as an NGO, a PBO. I'm not going to work as a business. Thanks.
Hello, Zanelli.
Hi.
Thank you, Mrs. Mbeki. It shows that it can be done. I believe, Daniel, that there are a few questions. One of the questions directed to Kies and Mark. What's the potential of a cooperative bank for farmers in South Africa? Also for Mark, can you maybe expand a little on the forward buying model, such as the one which I believe Prince Cyril Mabandla is promoting, and how would that kind of model work? Kies, can I pass on to you to open up on the potential of a cooperative bank?
Yes, you can. As I mentioned, Rabobank, of course, was started many years ago as a cooperative bank. But don't forget that cooperative bank was actually very many small cooperative banks for each village, almost one, and then later they amalgamated. If you look at the total debt size today of the agricultural market, I believe some of the previous speakers mentioned 187 billion. You know, it is the question, of course, if farmers in South Africa are willing to underwrite, you know, so much debt on a national level. I do think, you know, there will be an opportunity to, you know, to provide maybe equity in a structure, and that can be any structure, and there, you know, be instrumental to absorb some of the losses if necessary, and then also on the other side get some of the upside in that. So I do think there's maybe a role for the farming community in South Africa to take an equity stake and thereby increase the loss absorption, but also have an upside. But I personally, I don't think actually that you know, today the issue at hand is a national issue, and I would think that that in itself, and I don't underestimate anybody, but in itself that would be beyond the you know, the capability of the rural community alone to find a solution and to absorb all the potential losses actually by providing equity for a full national cooperative bank. But I think, you know, as a shareholder in a structure, I think there is a place for that.
Thank you very much, Kies. Mark, maybe if I can also add to the question to you, what's the risk of going to a foreign funder like we've seen Humansdorp Kooperasie doing?
Okay, thanks. Let me talk about forward buying, just for starters. I was chairman of the South African Futures Exchange for 5 years, mainly because I was head of treasury at Standard Bank, and we got involved in quite a number of sort of world-scale financing projects. One of them was the financing of Western Areas and Beatrix gold mines, where we essentially sold forward the production of gold, because the yield curve, and stop me if I get to pretending to be too clever here, the yield curve was at you know, a lower yield than the money curve, if you, I'm trying to make this simple, okay? And so you could finance the production of gold much cheaper if all you had to do was what you did every day, which was to deliver the gold into the equation, not money. Okay, so it creates an intersection of capacity and delivery when matching finance with produce. So if you're an you know, a citrus farmer in Mpumalanga, and if there are such things there, and you have to, and all you have to do is do what you've done for 3 generations, which is produce nice oranges. I probably chose the wrong province, Lowveld. Okay, and so, and if you produce the oranges in a predictable and deliverable way, we will pay in advance for that delivery. You can use the capital that you get in advance to buy the seeds and, you know, irrigate the land and do whatever else it is that you I would just stop this call, and do whatever else it is that you might need to do. I would call that seasonal or production financing. It doesn't go to, you know, capital that's required for tractors or purchasing of land, all of those sort of things. And the security is limited, but required to be the output of the farmer. And so I think we have to go to Land Bank. If we call them the center of the universe for now, we have to go to Land Bank with part of the solution. We can't go and tell Land Bank what to do, but we can say to them, here's a piece of this puzzle that we think we can finance. And that's where futures, which has got a very transparent, visible price, a very transparent yield curve, if you like, a cost of funding, and you can measure that against what it would cost you to finance your farm in the aggregate. So it's very specific produce-driven funding. I hope that sort of makes it clearer. And it's just an option. And it's deeply liquid markets where the price is known, and from time to time, you can tap that market quite easily by just entering into the appropriate forward delivery contracts for your produce. So that's what that is. You know, how easy would it be to attract foreign funding? I think relatively easily, other than the undercurrents of, you know, transfers, or expropriation of land without compensation, and all of those kinds of things. And I think what we have to do is we have to allow those who seek to put capital at risk in this market to be, if you will, immunized against the political risk. So, you know, maybe there can still be a discussion about expropriation of land without compensation, but you can separately look at financing the fruits of the land, if you will. And you can separately somehow ring fence the capacity to deliver and earn money. And so that solution to some extent has to also be solved. I think one of the risks is that if the only source, to be extreme, were to be foreign funding, then the foreigners would end up owning the farmers in one way or another. You know, when you're short of money, you're not owned by your shareholders anymore, you're owned by your creditors. And I think that would put us in an invidious position in terms of just general trade balance and the ability to deal with a resource as fundamental as food. And so I wouldn't want to find ourselves locked into you know, foreign food security when we have our own food security to deal with ourselves. Now, the other problem with this, if I might call it, you know, elaborate funding, is we need to still be able for the lowest consumer to pay the lowest price per unit of consumption. The real problem with getting higher up the risk return curve, and that includes the currency risk that we'd adopt from a foreign funder, is that the cost of capital, you know, finds its way into the cost of the orange, and eventually it's not the rich who suffer, and it's not the trade partners who suffer, it's our local consumers' inability to afford the market. And so we have to find a balance between government and commercial funding. We have to find a balance between the developmental mandate, which is our responsibility as fellow South Africans, and the commercial mandate, which is an intimate part of the puzzle, which will enable the development finance to come to the party. So those would be some of my comments. Keir said earlier, he talked about the concept of equity. I have absolutely no doubt that we have to introduce the concept of equity capital, non-yield requiring, non-service requiring capital, which is patient and which can tolerate time in the interest of growth. And so I think we have to be able to do that. And I think if we were to establish an equity base, I love the idea of a Rabobank in South Africa, by the way, and I think that the farmers here would happily sign up that security. They're already signing it up somehow or other, because that's what they need to do to survive. So I think there would be space for a cooperative bank, and maybe there's space for different kinds of membership of such a bank so that we can accommodate our dual mandates here. I hope that answers some of the question. Thank you.
There's an interesting question. Currently, farmers are making use of the credit leverage by using input suppliers as financiers. This is expensive, however. What's the options for that? And if I can pass that question to you, Igu.
Yes, there's a lot of farmers that are actually doing it because they couldn't get by commercial banks and wherever that is. And these financiers of your input costs knows it, and they actually overcharge you on your interest rates. That's why I previously said interest rates can't be expensive. They have to be affordable. But you're a risk for them, so they give you on a higher interest cost. They calculate your risk, they put it in a higher mandate for you. That's what's actually happening currently to farmers. That's not long-term sustainable for a farmer that's already in huge pressures as is. Thanks.
Thank you. For Wimpy Snyman, how much more expensive would commercial bank financing be for farmers? And which part of the land bank's customers could be accommodated by commercial banks? You know, I can understand this question because planting time is 2 months away.
Yeah, so thanks for the trick question. The long and short is obviously risk return plays a role. From the models and the work that we've done to date in trying to understand where we would price the books through the platform, if the platform is the solution that I spoke to a bit earlier. The indications are that you're looking at about 100 bips in price difference from previous rates that farmers had to pay through, let's call it funding from the land bank through the cooperative system. So 100 bips being 1% increase plus minus. You can't hold me to what I'm saying, but that's what it currently looks like to us. Hopefully that answers the question, Theo.
Sorry, Wimby, what's the
Does
base
that
rate
mean
you're
it's
referring to?
So the rate that I referred to as the prior rate would be what farmers were used to being charged by the cooperatives, while the cooperatives still had access to land bank funding. The difference between that and what we are proposing as a lending through the platform, I have to unfortunately say that it depends on the portfolio of assets. It depends on the risk profile of those assets. It depends on the structure of the capital piece. Depends on how much equity you bring in at what cost. But from our workings and from what we've seen, there's an indication of about 100 bips. Does that help, Mark?
Well, I still don't know the number. I mean, how does it relate to prime or the money market rate or the CPI? I mean, I'm not familiar what the previous lending rate was of the land bank.
So to Hugo's point about subprime lending, if you look at a portfolio of clients that typically sit within a cooperative structure at the moment, you wouldn't be lending at average below prime. You'd be lending at above prime, 150 bips above prime, if that's an indication.
Yes, I just want to correct you on that. Most co-ops was at prime that I lended out at. So you basically got to come in at current prime at 7%. She will come in at 8%, as I understand you now.
Yes, I mean, what one needs for that purpose is a schedule. Sorry, there's some feedback. What one needs for that purpose is probably a schedule of all the cooperatives and what the average rates are. I mean, we don't have that. This is an estimation, and from what I'm hearing from you, I'm putting 50 bips up on what you're saying. So I mean, it's not worlds apart, but there is the additional margin in it. I'm not going to try to debate the point with you.
Chair, a question from Please, Mark.
You know, the banks are the banks. And banks, the last thing you need in a credit committee is cleverness or innovation, okay, because it disturbs the systemic behavior of loans. Okay, and so the banks are going to come, in my view, and I'm not saying this wanting to start a debate, but the banks are going to come, in my view, when the rest of the puzzle has normalized the risk-return equation into a priceable asset. Because what we've got now is not a priceable uniform asset at all. Okay? And so at best, the banks can come in when we've got some sort of aggregate predictable behavior against which to lend money. They can't lend money to one farmer in Himanskraal. It's too specific risk. I mean, if I look outside my window, we've got a proper Cape storm here. I don't know whether that's good or bad for farming, but it's specific to this area right now. And so I don't think we can look to the banks other than to fulfill their normal role, if I might suggest that, which is to have senior secured lending or else to have working capital funding. And so I think they are part of a solution, but we need to construct a risk-return framework which matches their requirements. They don't have the latitude of innovation that I think financiers with a vested interest in the outcome of agriculture can bring to the party.
Thanks, Mark. And maybe just to add to that, so definitely play the normal role we did, but added to that, and I see it a bit as an obligation of risk sharing. So bringing to the party and making funding opportunities available. I think the commercial banks can play a good role in that space as well.
We have a question from Mdu Shabani, previous Director General of the Department of Land Affairs. This is the real elephant in the room, he says, for black farmers in South Africa who have long-term leases that can be registered in the deeds office to formally security, which they do as they do elsewhere in the SADC region. There's another question. I want to pass this one on to Davi Ruud. Also, what is the effect of the downgrading by the credit well, what do they call the credit?
Facilities.
Yeah, by Moody's and these on the current situation, the rating agencies. I have to translate while speaking, and I'm doing it all the time and anyway. Davi?
Yeah. Okay, well, let's do a comparison. In South Africa, we currently pay for 10-year money about between 9 and 10%. That is the state, the government, pays between 9 and 10% for 10-year money, roughly. The Americans pay about 1.5% for 10-year money. The Germans pay roughly about 0 or just below 0 for 10-year money, and the Japanese also below 0. So the gap between us and the rich countries in the world is roughly about, let's call it 8% or so. There are many reasons for that. One has to do with inflation. Inflation differential, currently South Africa inflation rate is probably around about 5%, they about 2%. So that means if you deduct that from the difference, that 8%, that brings us to about 5% difference. That is then the after, let's call it the real rate of a 5% difference between South Africa and the rest of the world. And that is roughly the risk premium that we are paying in South Africa. That 5% risk premium, at least 2% of that can be ascribed to the rating agencies. To get this, so that's a long answer to try to get to your long answer to your question. I would say that if we borrow that money in South Africa would have been, if we talk about money like, for example, longer term money would have been at least 2% cheaper if it hasn't been for the fact that South Africa is currently rated as so-called junk. And then there are some other variables as well. So it's not only a matter of perceived risk to South Africa, it's also the inflation differentials. So my answer to that is that we probably pay about 2% or perhaps even a little bit more because South Africa is South Africa.
You're on mute, Theo. Theo, you're on mute.
Yeah, you're on mute.
Davi, we have missed the last few seconds of your input.
Okay, the last few seconds, repeated again, is that South Africa pays something like, I would say, roughly about 3% or so more for money. Well, between 2 and 3% more for money than what would have been the case otherwise if we were still investment grade. So that's the price of being junk bonds, is that the cost of capital in South Africa is between 2 and 3% higher than would have been the case otherwise.
Thank you. I attended a conference on agricultural financing the other day in Kenya at the School for Monetary Sciences in Nairobi. And this was a very heated debate. Why can't we finance based on the collateral of long-term lease agreements instead of title deeds? Because it is actually only in South Africa and Namibia and small pockets of Botswana and Zambia where we have title deeds. Now, we have just more than 4,000 South African and Zimbabwean farmers farming in 44 countries in Africa. And I don't know all of them, but I know most of them. And I do not know one of them who's not using their South African property as collateral for the loans they have in Nigeria and in Tanzania and in Mozambique. But in this debate, it came out that Even in Germany, in the former Eastern Germany, long-term lease agreement is accepted by the banks as collateral. And then some of the bankers said it's because there is stronger trust in the owners of the land. It came out that if you have involuntary movement of people off state land, then state land cannot be utilized as collateral, like we have seen with some of our beneficiaries of land reform in South Africa. Hence, I believe the question from Ndu. We have run out of time for the discussion and the participation of the panel, and I'm going to ask Frik Dreyer, an industrial engineer with many years of experience in vehicle financing. He's also the operational manager of AfriForum, to just put everything we have learned today in one bag and give us a summary of the options. Frik?
Yeah, thank you, Tim. That's a very interesting. Yeah. Can you guys hear me? Guys, can you? Yeah.
Yes.
Okay. First of all, so yeah, what I've listened to and what the panel has spoken about is, first of all, this, and I think it was the opening remarks from who opened up. Sorry, what's his name? Higu de Waal, sorry man. Higu's opening remarks was definitely these farmers out there and they are in desperate need of finance. That's a fact. And with the advice of the land bank, there's now a shortage of this. What do we do to help these farmers? Secondly, if we look at this value chain, there are various options available in South Africa, and we've spoken about. Some of them is available right now. Some of them we are still debating what's the best way to finance it. Some is from abroad. I don't know. I don't understand that market that well. But on the one side, we sit with the farmers. On the other side, we sit with current available funds or funds that's going to be available in the future. How do we bridge the gap between the farmers and these funds? And I think just touch quickly using technology. I'm going to touch on that really fast. But first of all, we need the right people out there that can assist the farmers. And these people are available. These people with knowledge out there that's still working with farmers. I've spoken to some of them over the weekend, Nicola Roux and Walter Dyson from the Dacona Capital. They are working with emerging farmers currently, desperately looking for various funds where they can get finance from. And they are willing, they ex-bankers, they are willing to participate. They've got access to many other ex-bankers and economists that's also working with the farmers out in all over South Africa. So we can actually leverage that and activate that very quickly. So now that's very short term, guys. So what I'm, ladies and gentlemen, so what I'm trying to refer to is that we've spoken theoretically. How do we make this practical as from tomorrow morning? And if it's needed tomorrow morning, I'll listen in 2 months' time. The farmers need to start planning. So that's first. We need the right people. The right people are there. The people with the right knowledge. The people with the right skills. And I've spoken to them already. So secondly, definitely we need the right business-defined process. In the motor vehicle finance industry, I was involved for 18 years in setting up a portal where there's about, I don't know, I can't remember how many there were, but about 8 banks offering loans to motor dealers. It's a different market, I understand that, but still the process of applying, of validations, of risk mitigation, of getting supporting docs in, all that can be done via technology, via enabling technologies that's available in the market currently. There's some of these systems that we can really take it and we can clone it and give it a name, whatever we want to give it, and that can be, and that's short term. I'm not even talking long term. There's no need for direct integration with the banks, but putting technology available, what does that do? It makes, first of all, it makes this finance options available to the farmers. It does the application in a structured way, it does it in a transparent way, and it makes it a lot easier for anybody to access these finance houses or these finance capital. So in short, too, that's what I picked up from this. Can we do this in the short term? Can we make this work practically? Because I'm not a banker, I don't understand all this what you guys have spoken about. Yes, definitely. Can we do it? Can we do it if we want? If we got a source of funds, can we do it within the next 2 weeks? Yes, absolutely, that's possible. So we need the right people. We've got the right people. We need to define the right business processes so that the farmers can understand the processes very well. And thirdly, we can use technology. And I agree with Mr. Bayer 100%. You don't need a lot of people. If you use technology to enable this process with a very focused approach, and that's very important, focused on providing finance to the farmers out there. And that's my take on today. Thanks.
Thank you very much, Frick. You know, they say capital is as shy as a deer. When you scare it, it runs. Most important is that we need in South Africa to create an environment which is conducive for good business in agriculture and for investors. And the most important investors on farms are the farmers themselves. Every time they put diesel in the tank of a tractor, they are investing on their farms. Thank you so much for Hugo, a farmer here from the Western Cape, Davie Rood from Efficient Group, Mark Barnes, Henk Achenbach, Wimpy Snyman, Kees Verbeek, Prince Savile Mabandla, and I'm so sorry that the technology failed us on his input. And he's actually bringing the option to the table of forward buying, especially from the United Arab Emirates and elsewhere in the Middle East, of investors who want to buy next year's crop already today and use that as an option of financing the crop. Thank you also, Mrs. Mbeki, for your input. And of course, it is important to finance the women in agriculture. It's as important as financing the youth. I'm extremely concerned about the barriers to entry to this sector, and it can only be removed by proper access to financing. Thank you also, Frick Dreyer, for your input on this. If you want to learn anything more about any of these options, don't hesitate to contact us. Our contact details is on our website, the website of SAI, and you will also find the recording of this conference of ours, both on YouTube and on Facebook, and you can access it via our website. It was a very timely experience. This farmers are in dire straits, and those who cannot have access to financing right now might not be able to plant the season, and it might very well be the end of the enterprises on their land. We get telephone calls literally every day of farmers who say, land bank's doors have been closed to me. Where do I go next? Where will I find alternatives? And of course, we wish we had a magic wand, but we don't. As Wimpy has said, some of our solutions is available right now, such as going to the commercial bank. Some will take a little more time, and some of it will take us a few years to put in place. But if we don't start now, we will not get there. We wish you the best of luck. Those of you who listened in, who are farmers and who want to know what next, please make contact with us so that we can see how we can help you from the side of organized agriculture. And may you have that access. May you have a good season. May it rain on your fields. May you be prosperous on your land. Go well.
Sorry.
Yeah, sure, Mark.
What are we going to do next? Someone has got to go to government and talk about this as a national imperative. And they have to appoint someone to run it. All of us sitting around this table have very disparate interests, and we've come to visit, but we haven't come to stay. Okay. And so I actually think that this forum, if it is such a thing, needs to create a voice which needs to start at the land bank or some governmental interface and create the capacity for this becoming a national imperative with a leader that can coordinate and anticipate and indulge and embrace the various contributions that are going to be necessary. For us to meet occasionally and share ideas with one another will not break the ice of discomfort that we find ourselves in. So I don't know how that happens, but you guys have got all the representation. You need to gather yourselves together and go and stand at the door of government and say this is a national imperative, which, by the way, is not to save people. It's to create prosperity, which we can all aspire to. We've got to go big. We've got to get loud. Thanks. And good afternoon.
Good afternoon. As you well know, there's already been a few of these discussions, but we first needed now to have this conference to see what is on the table. And it is not only for the farmers or business or the banks. It is most definitely also for the policymakers to be part of it. And this is why we have partnered up between SAI and a number of our networking partners with the Thabo Mbeki Foundation to see if we can kick open more doors than those which are open right now. From here on, the discussion will go between organized agriculture ourselves. We are really trying also to get organized consumers and then go to policymakers, also to the banks and also to other sources and see if we can put something together. This is not one man's job and it's not one organization's job. It is a whole cluster of stakeholders which we try to get together, or part of them, in this conference. And most certainly we are thankful for the role you yourself is playing in this, because you know the language of financing. And you will most certainly be invited to the follow-up discussions with government too. So go well. We will organize something like this again in the near future. If it is not for anything else, then for feedback on progress. See you.